And welcome all you Wednesday night folks who have turned into the good old bodies and wicks. Thanks everybody for tuning in and checking it out. Man, what a day. What a day it was. What a day it was. For those of you that do not follow the economic calendar or don't know what the economic calendar is, I would suggest that you definitely take a look at the economic calendar, especially when it comes to Wednesdays, because Wednesdays are it generally happens about once a month. The economic calendar does this, and you get this thing called the FOMC, right? And that's basically what happened today. Where is it at? Is the question. There it is. Oh, of course. All right, now let me switch over to a little chart here. I'm looking straight here at you guys anyway. Switch over here to the Forex Factory, and what do you see with these red, just red folders here? You got FOMC economic projection, FOMC statements. You got federal fund rates, FOMC press conference. These are huge factor in the US dollar. I mean, anybody who did not see this coming, I just don't know what to tell you. I should have made a video yesterday, possibly saying, hey, there's going to be some huge economic outcome coming tomorrow, possibly watch out. And doing a top-down analysis, I saw that the dollar was going to fall, and I'll get to that in a little bit. But first, I just wanted to show you that, check your forexfactory.com. You can also check out Econo Day. There's one here. It's called Econo Day. It gives you a lot of good information as well, about different kind of announcements between different kind of global currencies, things like that. Here we go. Looks like tomorrow we have some jobless claims, and I'm pretty sure all this would be also found on Forex Factor as well. But these are the kind of things that you want to look out for. And even when it comes to the crypto world, right? Even when it comes to the crypto world, because everybody thought today was the day, and I'm sure you got it too, right? You probably got the stimulus check, right? I got mine today. I know I got mine today, but do you want to honestly know where mine went? Here, I'll give you an idea. Let me go to a little browser here. Well, first I want to show you something I'm gonna do here in just a second. So I'm actually on it. This has been a trade I've been in for a while. Of course, as you can see, it has now gotten to quite some time, quite some high. But this is Cardano. But nevertheless, I will show you exactly where my stimulus check went, if it will even show me where it is. And I am not fine. Give me 1 second. It's gonna show up here in just 1 second. There it is. Okay. Boom. There's my there's my stimulus check right there. That was my stimulus check. That's what I went crazy on, man. I absolutely went crazy on GBP USD, and I went absolutely nuts on gold, enough to make me about $2. That was about it. And to be honest, I pray a lot of it had to do with work, and I was just trying to watch closely and to make sure I wasn't trying to get too low. And unfortunately, right around 2, I knew 2 o'clock was coming. That was when the FOMC was coming. But unfortunately, I got pulled into a meeting and had to do with all this kind of bull crap, and it just really made me salty, because I knew it was coming, and I went back to my desk afterwards and I just saw everything flying, and I was just like, man, I just missed out on like the biggest, you know, probably one of the biggest days I probably could have had in a long time. But that being said, here's Cardano. What I should have done, and I marked this out a long time ago, I found the spot where I should have entered, and I marked this out before, a long time ago, before I entered. I probably marked it like right after I entered. I said, okay, here's a little gap down here, and this is where I should have entered. Even though it got a little bit lower than I expected it to, this was the other gap that I expected it to enter, and it did. It did enter that gap. So there was 2 gaps that I was expecting it to enter, and it entered both. And I actually set to take profit or an entry for this one. I don't know what happened to it. I really don't. Sometimes this thing just acts weird. But what I wanted to do is I wanted to go ahead and do a little take profit here, just to make sure you guys did see that I did enter this trade. I am in this trade 100%, and I think I started off with about. No, I don't think I've taken anything off yet. Yeah, you can see my entry here, but I don't see any dots. Well, let me move that back. And let me close this here. I don't see any dots to where I have actually exited the trade at all. So this is good, because, you know, I think I did some over here over at TP1, because I did hit take profit 1, and I wanted to take a profit, but maybe I didn't. But maybe this is a good thing. Anyways, take profit, what you usually do is you click on this thing will click modify, click X, it'll ask you to take a partial. I do want to take a partial, and right now I am way past TP2. I am very close to my top, so I am going to take 900 out of my 1000 right now and only leave 100 left, because why not, right? If you're this high and you're this close to your goal, why not take the one of the biggest portions that you can? It just, you know, to try to hold off, and to try to hold off for that little extra 100, just to see, you know, what happens if this thing turns around and just go, you know, and falls right down. You would feel completely and utterly helpless. So always pay the trader, no matter what. You know, and I can see it's also made 2 equal highs, which to me says that we're gonna go even higher. If you see 2 equal highs like this, guarantee yourself you're probably going to go a little bit higher, because what that does is that guarantees that there is liquidity above that. And if you've ever seen my videos, you know I talk about liquidity a lot, meaning that once it gets up to this, right, people are going to think sell, right? It's probably going to sell a little bit off, and then it's going to poke right through it, and it's going to fall back, and it's going to poke right through it, and it's going to fall back. And it always does that to highs. It always does that to highs. Jesus, why? I thought I locked this thing. Did I not lock this thing? Let's lock it. Okay. So as you can see with this high right here, right? If we move this high over here, guess what happened? Boom, it poked above it, right? And it went back down below it. Here, well, this was just a FOMC day, right? So anyways, well, I do want to explain to you about FOMC day and about how I saw all this coming, how it affects everything. For one, the dollar going down is going to mean everything else is going up. Yeah, probably stimulus did have something to do with it. I'm not gonna lie. You know, probably people did get their stimulus checks, and you know, probably decided to put some money in. But the thing is that it probably happened, you know, it was sprinkled throughout the whole day. It wasn't enough to, you know, it could have been. I mean, but then again, you know, who at 1 o'clock in the afternoon is going, hey, let's throw in, you know, a collective bunch of people going, let's throw in $600-700 in ADA, or, you know, let's throw you know, let's go over to Bitcoin here and see what happened here. Let's, you know, let's all throw in a couple $1 million at you know, right at 2 o'clock where FOMC hit. You know, this is, again, this is all FOMC related. This is not really stimulus based related. I don't believe anything like this is stimulus based related. Everybody might think it is, but I don't believe so at all. This all has to do with FOMC. And if let me see if I can't pull something up over here to see what they said, what the latest release was. So let's go ahead and head on over to the news chart here really quick. Right. January, March, here we go. Let's see if we can find something substantial in here. You know, for release at 2 p.m. March 17th. You know, let's just do a quick search. See if I can't find a quick search. And is there a search function? F. There we go. Let's see if we. Okay, no crypto. No crypto. Really? Bitcoin. Nothing like that. Electronic, nothing. No, nothing like that. Jeez. All right, something's wrong here. Even currency's not pulling up. No currencies. And why did that just go back? I'm trying to figure out if there was something in this Federal Reserve release here that has to do with some kind of, because they've been talking about it, right? The last couple times that you know, the FOMC or Chairman Powell spoke, or even Yellen, Jesus, Janet Yellen is even talking about Bitcoin as, you know, they're gonna be the downfall of all these things. And but right now it just seems like they're continued to, you know, mask the fact that they're going to try to, you know, maintain inflation at a continued below 2%. The thing about this is that it's going to be this 2% is not what you think it is. It's not like a 2. It's gonna like, it's like an average of 2%. So after time, this average of 2% actually continues to get higher and higher and higher and higher, to where, you know, what actually would be 2% is now like at 18%, you know, like compared to today's standard. But at the time in the future, it is going to be 2%. That is the biggest problem with this whole 2% thing that they keep going on about inflation. Just in case you didn't know that. Of course, we all know about the year March 18th. Okay, here we go. Here may be some different news. The Open Market Committee directs the desk to undertake open market operations as necessary to maintain federal funds rate and target 0 to 1.4%. Okay. So are they upping the range, or are they upping the percentage from the Fed? Increases system open market 80 billion per month. Agency mortgage-backed securities. What do you? Yeah, I don't know if I necessarily agree with that. Increase holdings of treasury securities and agencies MBS by additional amounts and pursue commercial bank. Okay. By agreement offering a rate of 0% and with pre-counterparty of 80 billion per day and counterparty limit. Okay. Okay. Nothing. Yeah, ready to board government unanimously to approve the establishment of the primary credit rate at the existing level of 0.25%. Okay, so the primary credit rate at existing level of 0.25%. So maybe they are taking the Fed and actually upping the rate from 0% to 0.25, which is, to be honest, absolutely needed. You can't have artificially low rates forever. As much as you would love to have that, it can't last forever because it will implode. But then again, this was again a huge blow to the dollar. It was a huge blow to the dollar. But here, let me get to why it was a huge blow to the dollar. Let me see if there's anybody even watching this. Nobody. Okay. It's okay. Alright, so let me get something to drink while nobody is watching. All right. I am back. You know, I hope that the audio isn't too loud. I can't really tell through my headphones. So I will turn it down just a little bit. And I don't know if you let me move it back over to the charts here really quick. I don't know if you noticed, but I got a new little thing in the upper right hand corner telling you, hey, what song is on and who it's from, in case you didn't know. But this right here, this is Bitcoin. But what I want to do is show you what happened and why I thought the dollar was going to be a huge failure today. And it took a while for it to get there, but it was easily foreseeable. Easily foreseeable. And sorry, I have way so many markings. So it all has to do with the Fibonacci tool, right? So let me see here. Let me remove this part of it. Well, this was the premium. Yeah, okay. Here, let me remove this part of it. And let me go to the daily. And let me remove every single bit of this off of here. So, as you can see, from the daily, since basically November, probably even before that, I remember when the dollar was just starting to run. I remember we thought it was going to be back, you know, probably sometime around April or so, and it just wasn't. It just started declining. But here recently, and I'll probably have to go to object tree here in a second and just turn everything off. Except for one thing. And that one thing is going to be the fib. So Here we go. If you take from here down to here, what just happened? Back. What just happened recently? Within this past week, it got up into the premium level, right? So it got into the point to where the banks want to sell, right? Banks want to sell above the 50, ideally anywhere in between 61.8 and 79%. That is where they want to sell, because if they've already dropped here, this to them is a discounted rate, right? So they sell here, they know now we're looking at even farther. We're looking at even farther. We're probably looking at going down to this level here, you know, 127%, 87.834. We're probably looking to go into here, and I'm going to start drawing some lines here across, and let's see what this is going to compare to compared to 2018 whenever we got this low. But the difference between now and 2018 is, well, you know, 2018 there was, you know, we had some crisis going on. There's a couple different things going on that we definitely had to spend some money on, and you know, we got it back in almost no time. And that's what caused the, I mean, look at this. I mean, if we were looking at twice the amount of what a good thing that wasn't open, or else that would have been all over my computer, and that would have not made my computer happy for like the 5th time. Or my keyboard, I should say. But that did go somewhere, of course it did. And let's just see where these line up. I bet these line up in particular areas. So, oh, this is 2018 right here. So we're looking at back in 2014 over here, and because we're on the daily. So if we, oh, don't do. Hold on 1 second. Exit page. Screw it. Come on. Hurry up. Killing me. You're killing me, Smalls. Killing me. All right, back to Bitcoin. What is it? I told somebody earlier, I said Bitcoin just hit, you know, the order block. It would probably bounce back, and it did, which was this red one here. I said it'd probably bounce back a little bit, and then it'll continue going forward. So just thinking out loud. Anyway, not XAU. I'll get to this in a second. This pissed me off too, but again, I'm gonna hide all these. We're gonna go do this all over again. Back to the daily. Back to the object tree, and oh really? Come on now. I had all these things lined up perfectly. Now, dropping like Oh, it's not would do. I don't know. All right. Again, let's do this all over again. Fib. High. Below. Looks like I already have a fib here. It's not working out too well for either one of us. All right, there we go. So, considering we did have that fib from high to low, and last week it came back up and it got into that premium of that 62%. That was it. And that 60% was also what? Boom, bearish order block. I mean, the bearish order block was that was just easy to see. You can see from here to here, both of those, two equal lows, bearish order block straight across. So as soon as it comes up, hits the 61.8%, it starts dropping off. Everybody kept saying, well, you know, it could pull up, and then yeah, of course it could pull up, but is it gonna get above this again? No, I don't believe we're gonna see it get above this high, the 61.8. It just wouldn't make any sense to get above this 61.8 again. So now that I've done the top-down analysis and I've noticed that, you know, ever since, you know, October, we've been going down, you know, until January, I think was when it was, January 6th, when we finally hit the bottom and bounced back up. And we finally came up above and hit this premium. I was wondering, I was like, man, is this thing gonna run away finally, or is it gonna do something? And then I pulled the fib and I realized, no, this thing definitely is gonna start coming down. So, of course, it was last week is when it finally hit the premium. So it hit the 618, boom, falls down. So after that is when I have been looking for shorts ever since on the dollar, right? And so I come in, I start looking at the hour, I start looking at everything, and especially this week, it's been kind of mundane. At the dollar, I mean, this is going back to last week. I mean, you can just see it. It just went straight. It's been straight across all week. Nothing happening. There was no news happening. Nothing until today. Boom, 2 o'clock. Boom, just fell like out of nowhere. And you can see it. You could see it out of the euro. You could see it out of everywhere. I mean, the British pound has been acting a little funky, but almost everything else, I mean, it just nothing. It just hasn't been a good trade week. Even the SPX was going sideways. You know, the Nasdaq was going sideways. But you gotta watch out for your economic calendar, because if you don't watch out for your economic calendar and you don't see that you have something like the FOMC coming, you don't see something that they're going to be talking about, you know, the exchange rates, or you know what's going to be happening with the economic impact, you're gonna have a slow week like this today. And then at 2 o'clock, yes, that's exactly when you're gonna find the biggest results of all time. Now, that being said, what I expected, and I drew this yesterday, and I actually wanna pull this up, because this absolutely killed me. Absolutely killed me. This is my idea. This is my gold idea yesterday, right? So my gold idea yesterday was that I think it was going to get down to 1724. So I had this idea that gold was going to get down to 1724, and the reason it was because there was a breaker, right? There was a breaker, and the 1724 was just below the breaker, just below equal lows, so that it would break those equal lows just outside of the breaker and then take off and go upwards. And I thought it would do it probably right around 2 o'clock, and I set that buy limit there, right? So, so today, guess what happens? Look, I mean, I'm so frustrated right now because it literally got what's the low here? 1724.33. I was 33 cents away from hitting the entry, and of course, I was either away from my computer or something. This is why I set limits, because I'm always away from my computer. I always got to do something. But once I get my signal service started, my boss already knows. I already told him. I said, listen, I'm gonna have to do some things here and there, and if it means I have to stay late, I'm gonna stay late. And he already told me. He said, okay, just do what you gotta do. Just make sure you get your work done. So once my signal services start coming out, and I'm gonna have to start paying more attention toward this during the day. I have to do long days at work, but until I can get this going, it's gonna be going. But this is what I'm talking about. These are the kind of things that you need to look for and understand that is possibly going to be coming. For one, understand where the breaker is, right? So the breaker is, you have a low, a high, a lower low, which is what we have. We have a low, a high, a lower low, right? Right. And so because of that low, high, lower low, you basically have a block that goes all the way across. And it actually meant to go up to here. There we go. And the reason I put it, and it's probably right here. There we go. So anywhere in, basically what technically with a breaker is that once it gets up and outside the breaker, it trades outside the breaker. You wait for it to get to the lowest point of that breaker, and then you trade it, right? And that's what I was trying to do. I was trying to wait to see if I get to the lowest point of the breaker before I could trade it. So of course it does get up and outside the breaker, right? And the outside of that breaker, what does it do? It creates equal highs. Look at this. You have 3 equal highs. So it tells you there's liquidity just resting right above here. Right, so boom, miss, right, comes back up, boom, miss, third time, boom, miss. So what does this tell you? That means there's tons and tons of people that have their sell, or what's the word I'm looking for? Geez, not sell stops, but the sell limits. Had to have their sell limits just sitting right around here. Tons of them. Sell limits sitting right around here, and probably with very, very, very short stop losses, because they keep seeing it come up here and fail. So their sell limits are probably somewhere around in here, right? With their stop losses right around here. And I just knew it was just gonna take off. And unfortunately, I didn't. I was 33 cents away from getting into my buy limit, unfortunately. But that wasn't the only one. I mean, there was a couple other ones that happened too. So these are the things you got to look out for when it comes to smart money, right? You have to look for equal highs, right? Equal highs will give you a definite giveaway. Hey, it's gonna go past this. I don't know when, but watch for the signs, right? Signs being breakers, signs being order blocks, signs being, see, here's another breaker here, right? Low, high, lower, low. You draw that breaker out, and if in the future, guess what happened? It dropped down to the bottom of the breaker. What happened did it do? Boom, pushed up. Same thing here, low, high, lower, low, right? Draw that breaker out into the future. What did it do? Get to the bottom of the breaker, boom, shoots up, It doesn't, if it was the other way around, it doesn't happen, right? I mean, it was kind of the same thing here. Here, you have a low, a high, a lower low. So here, you could have put this as your breaker and actually put this out into the future and actually use this as your breaker, and you would have made tons of money. The problem is I was way too conservative. I should have put this up just a little bit higher, and I would have taken off with a ton of money today. But like I said, I was playing it safe in a lot of different areas, primarily because my mentorship has been just, I'm doing my guides with my mentorship, and it's just been finding 10 pips a day. You know, even though I can find 10 pips a day, I find 10 pips a day, I stop there, I move on. You know, I'm not trying to like to outdo anybody or outdo anything else. I'm not trying to, I don't know how to explain it, but I'm not trying to go above and beyond yet. I'm still just trying to learn, and I'm trying to learn by teaching you guys as well, you know, right? Just by learning these little things here, you know, finding that this has actually become one of my favorite trades has become these breaker trades, right? Looking for these low highs and then lower lows, and then finding these highs and then stretching them out in the future, and then once they get to the low point, you know, that's the trade. Here it is, low, high, lower, low, stretch it out into the future. It gets back down at low point, boom. I'm sure it's going to happen again, and I'm looking over here to the left to see what we can do right now. And right now, all I see is a what's what I'm looking for? This is a buy side liquidity pool right here. So get a buy side liquidity pool right here. Come on, pull up for me here, buddy. Oh, I need to turn it off this crap. Oh, I thought I turned it off. Jeez, what just happened? There we go. All right, coordinates. Gotta make sure the coordinates are the same. Sorry, I'm anal about my lines being super straight. Okay, so now I have a buy side liquidity pool. So what does that mean? That means there's liquidity resting above here. Because people are thinking that since there is a high here, it's going to come up here and probably sell off. And it might. It might. Just like this one did here, right? You have this line, this red line I drew right here. That's why I did it. It goes 1, 2, 3 sell-offs, right? But we got to see what happens in between now and then to see what we're going to find out. Now, why do I have these two yellow lines going across? Well, it's because there's a break. Not because there's a breaker. It was because I want to say in the 4 hour. Maybe it was the 4 hour. Jeez, let me get back to it. Yeah, 4 hour. It was the 4 hour. So in the 4 hour chart, what you have is a fair value gap, right? So you have a little gap right here, right, to where the wick comes up. It doesn't necessarily touch this wick, right? So you have this down push candle, right? But on each side of the candle, the wicks don't touch. So there's a gap in there. We don't know what's in that gap. We don't know if price has been missed, right? It's just like any other gap. It's just like a gap, like as if you were at the end of the week, right? At the end of the week, you know, you start a new week, a gap opens up, it usually comes back down, closes the gap, goes back up. Same thing with these kind of things. We don't know what's inside this. All we see is just a big red bar. Price could be jumping over dollars and dollars, who knows, or cents or whatever. We don't know. All we know is that it's just filling in because it was moving at that time, right? So it could be jumping over prices that we cannot see. So that being the case, you always gonna have to take those into consideration and think of those as gaps, right? So that being said, as this comes down to, you know, the bottom of the breaker, boom, pushes up. What does it do? Goes through the gap, right? And then pulls back down to the top of the gap, right? Making sure everything is filled in for that gap now, right? And now we are moving upwards. So now we have a buy side liquidity pool here. I am waiting to see what is going to happen. Now, that being said, I want to move these gaps back and second, because now we know that these gaps have pretty, I mean, even though the gaps have been filled, the the algorithm will still remember them. So whenever it does come back to those, the algorithm will still remember those, and it'll remember those gaps, and it may stop at them. It may, you know, jump from them. It may go below it and then come back and hit it and then go down. Who knows, right? We just don't know yet. We kind of have to just play it by ear. So that being said, now we have new gaps to play. Now we have new gaps to look at, right? First one being this one, right? The very bottom of this candle. And let's go up, make that equal, right? And then the next gap is going to be here. Why? It's because it's between the two different candles, right? You have one big large green candle, right? On each side of those candle, on each side of that big large green candle, you have a red candle, and then you have another green candle, right? What you don't have is this candle coming and pulling back down to try to touch it, to try to close in any kind of gap. Not even this gap right here, right? It didn't even try to come in to try to close that. You know, it's not even a support and resistance idea. It's just that, hey, there is a lot of, I wouldn't even say buying power, or repricing. Repricing is the word, actually. There's a lot of repricing going from here to here, right? Now, we don't know if it has actually jumped over since, you know, dollars, whatever it is. We just can't see it. We could if we had, you know, the 1 second mark, you know, but then again, we just don't see it. So therefore, my personal opinion right now on gold is that, you know, it's going to take it may take time. It'll probably take probably about until 2 o'clock in the morning, right? 2 o'clock in the morning, we'll probably get right around there, just because that's, you know, the golden, the London kill zone, right? You'll probably see it, you know, fade off, you know, do something, I don't know, and then eventually it gets somewhere down into here, right? Down into this area that, right, it may even just cross this line, right? It could just cross this line, and that would be it, right? As soon as it crosses this line, who knows? Because that could be enough for it to turn around and go back the other way, right? So, and then that's when you're probably going to see it snap back, right? Or we could see it do something almost like this. Come up, get close, come back, get close, and then come up, and then maybe fall just a little bit short, and then go just above it, and then fall, right? You could see that, and then barely tap it, and then start coming back up. And the reason for it might do that is because it's trying to sucker you into thinking that it's going to sell, right? So you have all these people who are going to sell, and they start doing it, and they're thinking, oh yeah, it's gonna sell, and then they get a little scared, and then maybe they start buying, and then all of a sudden it sells again, right? And then it comes up again, and then it finally crosses that threshold, right? It finally crosses that threshold, and they think, oh crap, that resistance there is no longer there. I need to start buying, right? Also, at the same time, what you have is you have people with long positions, right? Or people with buy stops. Turn that off. Gee, just happened. 1 second. You have people with buy stops, right, that are sitting right along this right here, right? And let me move it over here just so I can show you exactly what I'm talking about. So you have people with buy stops who think that as soon as it crosses, you know, this resistance line, what it's going to do is that that new resistance line is going to turn into support. So it's going to cross that resistance line. As soon as it comes back down, it's going to touch it, and it's going to be now support, and then it's going to bounce from there and go on forever. That's not what happens. Anytime you see a high get broken, you usually see it get pulled back quite a bit. And the reason being is because it's going to take all those people who have those buy stops, it pulls them back, and it takes out their sell stops. It takes them out of the game. This is what smart money does. This is what smart money has always done, right? So just be aware of these things, right? So this is kind of my take on what I think gold will be doing. I maybe not, it probably within the but before the end of the week. I know tomorrow's Thursday. I am not for sure what to expect out of gold, especially after FOMC day today. We could see it completely take off and fly. Who knows? I'm looking over here. I'm on the 4-hour chart, and I'm trying to see if there's any kind of gap that has been left behind, anything like that. You got some kind of equal highs here. Here might be an interesting spot right now. Primarily because, yeah, you do have what we call soft highs. Soft highs meaning there's somewhat equal highs, somewhere where you would get and people would think it would probably drop from. Also, it would probably be right along the lines of a bearish order block. So it could easily get to somewhere right here, tap that, and then fall, right? So that could be an area of concern. And it would fall, right? But, you know, it may only do it once. And it may only do it for 30 pips, you know, or 60 pips or something like that. And then as soon as it gets done, it could hit something. Let me see here. Let me see if we got something that could possibly turn it around. Yeah, something like this. Like the top of that. Could see the chart come up, right? Hit the top of this. Come back down. Hit this. And then possibly just graze the top of this, pull back just a little bit, and then go. That's what you might see, is what I'm saying. So, you know, pull up to this equal high, all right, hit the bearish order block, hit equal highs, boom, everybody thinks it's going to sell, right? It does sell, and what does it do after that? Now it hits the bullish order block. Bullish order block, right? The last you know, down red candle, I guess you could say. So this one right here is what I'm looking at. The last down red candle before, there you go, the last down red candle before you know, moving on, I guess you could say. I'm not exactly for sure how to put it, but last down red candle before it actually makes a huge move downward. So pushes down, pushes back up, and then pushes back down again. Then that's when you would see that kind of hit the high. Then you come back, you hit the order block. Then you'd see it come back up, break the high just a little bit to trigger the sell stops, pull back, take out the sell stops from all the people who had short here, very short positions, something like that. People who think that as soon as it gets across this high, right, that it's going to touch this now, and this is going to become support, and then it's going to take on forever. Instead, what it usually does is it pulls back, takes out all the people who somehow believe that's, you know, support. It never moves, but support is subjective. Support always moves. Support is never in the same spot unless it's long-term support, like years and years of support. There are areas like that. It takes a long time to find them, but if you're looking at something within a couple months, you're not going to find support that's just going to stay there like that. So anyways, that's my take on gold. We should probably get to something a little bit more interesting like Bitcoin or Ethereum. Those are the two I think we need to get to. Bitcoin, Ethereum, SPX, NASDAQ. Those are the ones I really want to get to. Okay, sorry I'm smoking. It's my channel. I have to. I've been here for too long. I've been on for about 53 minutes. This thing likes to kick me off at about 55, 56. Actually, no, about an hour. So if I do get kicked off, hang tight, reload, do something, I might be right back. All right, now Bitcoin. What we got going on with Bitcoin? As you can see, my chart is just marked with all kinds of stuff because this is all I do. As you can see, guess what I don't have? I don't have channels. I don't have trend lines. Okay, I do have a channel. I do have a channel. And I want to see if it's actually going to follow the channel because I don't believe it will. Because they never do. Channels and trend lines don't work. They're false narratives. They're there to trick you. They're there to make you now what they do is they do provide liquidity, right? Because people are there to buy at trend lines whenever price gets to a specific trend line area. And then what it'll do is it'll cut right through that trend line. And then if you're buying at that trend line, you're screwed because you're one of those dumb people that were buying at the trend line. So that's why I never buy at trend lines. I don't trust trend lines. I don't trust channels. They change constantly. What price does, right? I've told this over and over again. If you've ever seen my show, ever seen me talk, price likes to balance, right? Price likes to find liquidity. If price likes to find both at the same time, right? So that's what price likes to do. That's what price is going to try to do. So let me see here. Let me see what we can find. I'm on a 4-hour time chart, right? With now, if you got I think I'm on premium. If any of you have these, I'm not an indicator fan at all. I'm really not an indicator fan, but these two I really enjoy. I think they're really good. They work well together. One is called open interest stochastic money flow, right? And you can change it right once if you go to the settings. You can put it off futures, or you can put it off others. I actually like to put it off futures because futures are the exact price. Sometimes you have to put it off others because some of them don't have futures, like forex crosses and things like that don't have futures. So I always like to put it off futures because it'll tell you exactly. And the way to read this one down here, the open interest money flow, is that if it's in the green, you're pretty much in a buying scenario. Once it crosses into the red, that means sell. If it's in the red and it starts going up and it crosses into the green, that means buy, right? So here we have both of those scenarios at once. Here you have the red crossing over to the green, right? So there's a buy scenario. In here also with this open interest stochastic money flow, we have a green. It's telling you a buy scenario. It is on this candle here. I'm not for sure exactly where it happened on this candle, but if we were to, let's say if it happened at the perfect moment and we got out at the right time, we would have went from 44,000 to 47,000, right? And look, it's still saying buy. They're both still saying buy. So depending on how much of a stop loss you would have put, it's up to you. But right now, neither one of them are saying sell. They're both, well, actually this one's about to cross over to sell. I want to say this one, they're actually both about to cross over to sell. So right now might be your time to actually want to pull the sell trigger, or the close the trade trigger, which you would be somewhere, you would have went from about 45,926 to about 48,704. So that's quite the difference. That's a good 4,000, 3,000 dollar difference. What was that, 8%, something like that, I think is what it showed, if I'm not mistaken. If I'm gonna have to go back and do this again. Yeah, by about 7.66%, somewhere 8%. I mean, you can't go wrong with these two indicators. I really enjoy these indicators. So again, these are called open interest stochastic money flow index, right? And that's this one, I'm leaning the right way, I'm not for sure. Kind of has the red and the green bars telling you when to buy and sell. It has a kind of stochastic flow going with it as well. And then you have this one down here called open interest money flow index. Very interesting. I messaged the guy who made these, but they're both by the same person. I asked him how he got this information, because I kind of use some of the similar information when it comes to commitment to traders. Whenever you look up the commitment to traders report, like for especially for currencies, Bitcoin has now got a commitment to traders report. I find those on bar chart all the time. If I could find a commitment to traders report for Ethereum, that would be amazing. Basically this uses the same kind of stuff, and he said that there is Quandle. There's information in Quandle here in TradingView, to where he was able to integrate that and write this program. So thank this guy for everything, for writing all these. So and the best way to find these is just search open interest.